February has been a tough month, especially considering all the optimism created by January's drop in rates. Now, mortgage rates has been tied to inflation and the market's anticipation of how the Federal Reserve will digest incoming data. Right, Jerome Powell and Fed, they want to see a slowing economy. They want to see falling consumer demand. They want to see a tightening labor market. Right, this points to an environment where falling demand pushes down prices and ultimately will get inflation closer to the Fed's 2% target. However, when you have a jobs report that blows out expectation, like the one back on February 3rd, which served as the catalyst for February's spike in rates, when you have manufacturing and servicing data pointing to a growing economy, retail sales showing that consumer spending is at its highest levels in months, CPI and PCE inflation data not quite falling as fast as the markets would like. Right? These types of reports, they tell the Fed that persistent inflation is still a real concern and call into question, will the Fed want more hikes? Will they want a larger hike in the next meeting? How long will they hold their short-term benchmark rate at these elevated levels? These are all questions that the markets are wrestling with when reevaluating their economic outlook, which directly impacts mortgage rates. Now, I'm not saying that rates are headed back to those October highs. The reality is that inflation is coming down. However, I do think the markets were a bit too optimistic in their initial forecasts and are now faced with the reality that this fight to tackle inflation will take longer than expected. Now, this points to mortgage rates improving at a much more gradual pace. And I understand that for many who are waiting the right time to buy and who sat through COVID with mortgage rates in the 2s and 3s, it makes it difficult to now be faced with mortgage rates in the 6s. But the reality is that those COVID era rates, that was the exception. With home appreciation expected to continue, I'm a big advocate for buying now. Get into the home, enjoy an appreciating asset and all the other benefits that come with home ownership, and then refinance once mortgage rates fall to a point that makes sense. Paying more for a home, even with a lower interest rate, does not always translate to a lower monthly payment. Hey, if you have any questions about these headlines, about these market or rate trends, or if you're ready to discuss your purchase options, let's talk.